Hello, and welcome to Pro Trader Strategies Market Commentary for Friday, April the 7th. Unenjoyment Friday, as we used to call it on the floor. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore, what I'm doing could be counterintuitive to what you are already doing. Hello, and welcome to Pro Trader Strategies Market Commentary for Friday, April the 7th. My name's Eric Wilkinson. Welcome to Unemployment Friday, or Unenjoyment Friday, as we used to call it on the floor. Anyway, some of you may recognize me as the Wolfman from CNBC, Fox Business. Hello, and welcome to Pro Trader Strategies Market Commentary for Friday, April the 7th, Unenjoyment Friday. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Sorry, we got some people outside the house and the dogs are going crazy, so please let that slide for me today. Anyway, on to the overall economic data. Over across the pond in Great Britain, we got manufacturing production. All of these numbers came in slightly lower than expected. It came in at negative 0.1%, was expected to be 0.3%. We also got construction output, came in at negative 1.7%, was expected to be 0.1%. And then industrial production in Great Britain came in at negative 0.7%, was expected to be a positive 0.2%. Also, Italian retail sales came in at negative 0.3%, was expected to be negative 0.1%. So all of those across the board were really pretty lackluster at best. And French trade balance came in at negative 6.5 billion, was expected to be a negative 4.9 billion. So across the pond, not looking so great on the economic front right now. Here in the United States, we've got our unemployment rate came in at that's Canadian unemployment rate came in at 6.7%. Here in the United States, we got hourly earnings came in at 0.2%, right in line with expectations. But remember, we want to see that number start to increase as we've seen some of the PMI numbers start to show a little bit of inflation. We need wage growth in there to counteract that for the higher prices that the manufacturers are going to be paying, because they're probably going to try and offset some of that higher inflation off to the consumers. Then we had the non-farm employment change came in at 98,000 hires, was expected to be 174,000 hires, and last month was revised down as well. So hires not looking as robust as we thought. We also got the unemployment rate down ticking, despite the fact that we're not seeing the hiring, to 4.5%. That's going to be the headline number everybody talks about, but you got to dig into that and really look at those hires and whether or not there are discouraged workers that actually just decide to not look for unemployment anymore. They may be unemployed, but just not employed, or they start to work on looking for part-time work, which, you know, if they had a full-time job and now getting part-time work, that's not good for the overall economy. Sorry again. Crude oil cruising higher again, breaking above that value area high that we talk so much about. It's above it right now. Really, if it settles below that, I'm going to be looking at adding some shorts to crude oil, some more shorts. Then on to gold. We got a real mixed bag here with that unemployment number. Not really looking as good, and across the pond, industrial numbers not looking so great. But we got gold futures up quite nicely today after settling again above that 9-day moving average. Tested that overnight, and now we're blasting off to the upside despite the fact that equities are moving higher. And then again, we have the bonds up just slightly on the day. Again, I really don't see it moving much higher than this. We are kind of going to be range bound and kind of bop around inside of this volume node, I believe, anyway. But you know, that's what I'm talking about with the mixed bag. We got gold up, we got bonds up, we've got some equities up. Everybody's happy. You can't be unhappy if you're long stuff, because everything is up on the day. This is the Dow Jones Industrial Average, up about 7 points, just kind of towing the line of that 9-day moving average. It's going to act as support and resistance. We've been below that consistently for the most part, and seem to be kind of trending along that as well. Then on to the NASDAQ futures. We got the NASDAQ here, up 3 points on the day, up 4 points, pretty much an inside day for the most part for all intended purposes. After yesterday's kind of late afternoon push to the upside, you can see overnight we were down pretty low, but on that unemployment number, we actually started rallying. E-mini S&Ps looks just the same. As you can see, the charts are almost identical the last few days. Nice rally yesterday, but today just another pretty inside day for the most part. This is the 30-minute breakdown of the E-mini S&Ps. You know, this is what I was talking about. This actually kind of just stretched out a little bit, but for the most part, our point of control right where the most time and volume, or most time has been spent over the last 20 days, and the volume is right in line where it was yesterday. But the value area high, value area low, pretty close to being inside of that. You know, I mean, it's not really a quote unquote inside day, but close enough for government work. Anyway, on to what I've done with Deere. We're coming into earnings season, as you can see, so I can't really go out too far into the May with this trade because I don't want volatility to expand. I wanted to take advantage of this range bound trade, and with it going into the last few days of April, I just decided to throw on a strangle in there and did the April 108 puts with the 112 calls to create a strangle in there, and collected 99 cents for that. So a little bit tighter than what I usually talk about in my market commentaries, but in my webinars, I should say. But with it getting this close to the end of the month and Deere being pretty range bound, don't see a lot of information coming out about Deere. The earnings are behind, or sorry, the earnings are coming up in next month, and we had the dividends already paid out, so I don't really have to worry about that too much. So just trying to take a little bit of theta to contraction out of that little theta decay play for Deere. That's all I got for you guys today, but like I mentioned, we're coming into earnings season. There's a lot of earnings coming up, making a perfect time to start talking about how to trade the earnings. We're going to be talking about different strategies to put around earnings trades to increase your probability of success over the next 4 weeks. So we're going to start out with the short call spreads, put spreads, create iron condors, and then how to defend these type of strategies if they go against us. So go to ProTraderStrategies.com and sign up for that. If you can't take that, take it easy.